What is good, everyone? Welcome to today's trade recap of the day. Today is Thursday, October 23rd, 2025. I'm be going over today's price action, the two trades I ended up taking. Today I made around $14,700 on the day, so we'll get into that in just about a second here. It's been a really slow October, as you guys have been seeing just from my Instagram story and from the lack of trade recaps. Just been a lot of break-even trades, a lot of no trade days. For me, this price action has not been the best, and I've been pretty risk off, not been taking a lot of steps, just honestly because my model hasn't been presenting itself that much. But yeah, I took a break even yesterday, trying along. And finally today we did catch two nice trades, really nice price action today. And it was the continuation model. So let's start up right now. First things first, let's go into the P&L. Here it is. Made around $560 across all of my accounts. So let's get into the two trades I ended up taking. It was a 1R loss, and then I had a 1 to 2R win. So I made it back and more. Let's get into first things first, the overall bias coming into the day, right? So coming into the day, I did have a very strong bullish bias, right? Just looking at this 915 candle, we did end up having an SMT here with Asia lows, right? So we had this SMT with Asia lows, and price is overall very bullish, right? I'm very bullish on the higher time frame. We ended up trading down into these gaps here, right? Price ends up trading into these gaps. We are respecting bullish on the higher time frame, and clearly we are trading towards what? These highs here on the 4 hour, right? We have relative equal highs here, and really like the higher time frame draw on liquidity is very obviously here, right? So I'm going to be looking for longs, and especially when I get this confirmation lower with Asia lows delivering us higher here, right? Once we get that SMT, we start delivering higher. This is great confirmation that we're going to be bullish for the day. Okay, so coming into 9:30, right? I was looking to see price trade back into a 5-minute or 15-minute rally gap to then take longs off of, and unfortunately, we just never did that, right? I had very obvious targets higher towards London highs. And we never really got any sort of retracement into a 5-minute gap or anything at all. So we just went pretty much straight up at open. There was some pre-market trade here. I didn't love this just because we kind of left relative equal lows here. Would have liked to see this low price get swept first. But yeah, I mean, obviously once we saw this displacement, we don't really care about these lows anymore. And we clearly started displacing higher towards what? This 15-minute high. I know I'm going to get the question, because I always do, why are you still longing? I think we ended up forming a bearish SMT here. Why are you still longing, Blake, even though, or we didn't form a bearish SMT? Okay, never mind. Okay, well, a lot of people were probably asking me, like, why are you still bullish probably like at this point? Because I was bullish this whole move up, even when we were forming these bearish SMTs along the way. And I didn't care because the draw on liquidity is still higher, right? And there's still nothing showing me on the higher time frame and in the internal time frame that we are bearish, right? We're clearly just running through all this, right? And even if we have a move like this, it's still probably just going to be a rebalance to then send price higher. So until I start seeing clear displacement through gaps and then clear delivery lower towards the next draw, I'm not going to look for shorts, right? So I'm more so trying to be reactive as much as I can be predictive as well, right? So I am predicting that we are going to go higher, but at the same time, I'm being reactive and I'm listening to simply what the market is telling me, right? So both on NQ here and on ES, we end up leaving. Okay, so ES did end up taking it, right? Okay. I don't know why I wasn't showing at that time. So ES did end up taking this 15-minute intermediate high, right? And again, I'm still bullish because the draw on liquidity is still higher, right? We still have this draw here. So not until ES takes like all-time highs or previous day high, then I'll start reevaluating my bias. But still, when we have these SMTs, even at like my main key level here, which is this, I'm going to just wait for more structure, right? So I'm going to wait for structure to present itself, which is what I pretty much did here, right? So we end up trading here. And we had this 15-minute for rally gap right here. I was looking to see price trade into this 5-minute, hold this 5-minute, hit this 15-minute, get some sort of SMT, which is pretty much exactly what we got here. And I really love this reaction. Once we had this SMT right here, as you can see, we had this bullish SMT present itself right here. Right, this is that 947 candle. Right, and you can see right here, this is the same candle right there, that 947 candle right here, right? So then we got this first setup here, and I did like this, right? 10 a.m. had this open low. We ended up opening, trading lower. We did not open higher hitting this key level, right? We opened lower hitting this key level, meaning what? This is most likely going to be a continuation model higher, right? The 4-hour candle, if it's looking something like this, right, where you have an open low, we're most likely going to get a high close, right? So that's what you want to be paying attention to. Okay, so we first got this setup, and I really, again, like this for long. longs, targeting this like a little 1 to 1.3. And again, my main target when I'm looking at like whether or not I'm going to continue being bullish or continue being bearish, I'm looking mainly at like, is this the most obvious rejection area? Like, do I truly see price rejecting off this point? And at this point in time, London highs, not really, right? Why? Because we clearly are displacing through this, right? We clearly displaced through this high here, right? So the most obvious area, if we were going to reject, if we were going to be bearish, looks like here, right? This is a high inside of a gap. If we're going to hit this, then we could probably start seeing sell model, but we are clearly not like just swooping this and then trading lower. We're not hitting this and then trading lower, right? We're just displacing through all of this, meaning what? The next draw is going to be here, right? So that's how I kind of formulate my bias. And honestly, this setup, the reason it really wasn't valid was because afterwards I did see that we did have a 3-minute gap. I did not see this at the time. It was really, really small, but this just goes to show why it's so important to follow the rules that I teach, which is taking the highest time frame inversion in that current trading leg. So I should have seen this, and if I did see this, then this would have been a break-even trade, because then I go break-even at this, and then it would have been a break-even trade. But yeah, ended up just taking the L here. Afterwards, I did see that. I was a little bit annoyed, just human error though. Now, moving on, we did then end up having this move here, right? Where we had a swing high to the swing low. That did end up hitting this 15-minute gap. So we did end up hitting this gap. And at this point in time, we then end up swooping this low. And now I'm going to look now on the lower time frame, the 30-second, even lower. Because I guarantee you, and I knew we did have a 30-second gap here, right? Which I was really, really confident in at the time. Because we, again, had this swing high to the swing low, and then we had this second move lower, swooping this low, having great displacement, still while inside this 15-minute gap, right? So we did trade into this one and this one, the little bit more discounted one, while still having our draws intact, still having this low resistance liquidity here. So I wanted to go break even at this high. This was the highest time frame inversion in this leg, right, from this high to this low. This was a 30-second. There wasn't a 1 minute, so there was a 30-second. And then I went break even up here. So I ended up entering longs right here with a stop loss at the low. I went break even once we took this high, which was also a 2-minute gap. And then I just simply targeted a 1 to 2 RR on this trade. All right. And then we clearly just started displacing higher and higher and higher. And eventually we did hit my target. And my final draw also was hit. And I think we did start selling off after this. And there we go, right? So that's why also I don't like holding so much like to the external draws, even if I'm super confident. I made that mistake a couple days ago. I had a great long setup, and I just got pretty greedy with my break even. So I haven't been trading, honestly, like the best recently, and I've been journaling a lot. Thank God I haven't been like taking a lot of losses, but just a lot of wins that I could have had, and it just ended up being break evens. A lot of just honestly human errors. So I definitely just need to dial in a little bit more. And that's pretty much it. But I'm happy with how I played today. It was great price action, great movement, really obvious draws on liquidity, and I just had to stay patient, wait for my setups to present itself, and I take it. And that's pretty much it. This was about, again, a 1 to 2 RR trade. And yes, it looks like, again, I still think we can see higher. I still do think maybe all-time highs this week. We could see maybe Thursday do it. Friday do it tomorrow. Tomorrow is CPI, so we could see CPI end up targeting all these highs. That is a possibility, and we'll see. All right, this is, again, like the obvious draws of the week. We have relative equal highs here. We have more relative equal highs, and then, we have that hourly, pretty much low resistance liquidity here. So I do really like longs. That's pretty much it. That's going to wrap up this trade recap. Thank you guys so much for watching. If you guys do want to start copy trading your trades, I use TradeSyncer. It's a really great copy trader. And then I'm also trading right now with 26 accounts. Right now, the accounts I'm trading with is Alpha Futures. I use Apex Trader Funding. And I'm using My Fund of Futures and also Tradeify. We just partnered with them. So I'm going to start adding some allocation with them. And yeah. Thank you guys for watching. Go check out those links in the description below. for some percentage off with those accounts. And I will see you guys maybe tomorrow if I end up taking a trade. Hopefully CPI injects some volatility. This is the first really big red folder news event we've had since the government shutdown. So it's really good, hopefully, that we can start maybe seeing some more volatility, maybe some better price action for me. I mean, it's already been really good price action just for my model specifically. It hasn't been the best. Haven't been getting a lot of pullbacks, but yeah, I'm not going to yap anymore, and I'll see you guys maybe tomorrow. But I am uploading a video this Sunday. Be on the lookout for that, especially for you beginner traders. It's a really great video that I just made. So go check out that video I'm uploading on Sunday. See you guys then.